Palantir had its most significant earnings call to date, highlighting its pivotal role in the AI revolution. Whether you're a seasoned investor or considering buying in, this isn't just about profits, it's about understanding Palantir's strategic position in a rapidly evolving market. Hey there, Tamir from Fibonacci-Traders.com here. Special stock a day about Palantir. Like, subscribe, and let's dive in. Let's start with a quote from Palantir's CEO, Alex Karp. Karp said, "The winners in AI will be powered by Palantir, and the losers will read analyst notes." In his letter, he said, "This is the software century, and we intend to make the entire market." This sums up my view on AI and Wall Street analysis. So let's skip the analysis and dive into Palantir's latest earnings call. Palantir recorded record revenue of $726 million for the quarter, up 7% from the last quarter and 30% from last year. That's a solid growth, but it's get interesting when we break it down by revenue segment. Palantir has four main revenue segments: US commercial, US government, non-US commercial, and non-US government. I'm most interested in their US commercial growth, since it's the largest and most profitable market for the platforms long term. But I'll cover all segments as they all contribute to Palantir's growth. Palantir's US commercial revenue was $179 million for the quarter, up 133% from the last quarter and 54% from last year. Thanks to two key numbers all Palantir shareholders should know. First, their US commercial customer count grew to 321, up 9% from last quarter and 77% from last year. Second, their net dollar retention rate was 118% for the quarter, the highest since 2022. These metrics are crucial for tracking Palantir's growth because they work together. A 77% increase in customers means more than just revenue. It means new users for Palantir softwares, allowing them to create new solutions to attract more customers. Their commercial platform, Palantir Foundry, offers many ready-to-use tools for various industries, from automotives and energy to healthcare and logistics. Building new AI solutions for this and new markets is one way Palantir can accelerate growth. On the other hand, the net dollar retention rate shows how much more existing customers spend each year. 118% rate means customers are spending 18% more this year than last. So 77% more customers and 18% more revenue per customer explains why Palantir revenue growth has been accelerating over the last 4 quarters, growing by 20, 21, 27, and now 30% year to year. It's not just commercial customers. Palantir's US government revenue grew by 40%, and overall government revenue grew by 33%. This growth shows they don't need to sacrifice one part of their business to grow another, which worried investors and analysts last year when government revenue grew just 10%. Palantir didn't just beat analyst expectations in commercial and government revenue, it also excelled in operating margins, reporting GAAP and adjusted operating margins of 16% and 38% respectively. This means their GAAP operating margins have more than doubled year over year. Palantir's US customer count is growing fast. US commercial customers grew by 77% and overall commercial customers grew by 51%. Palantir's overall customer count, including government customers, grew by 39% in 1 year. Likewise, their US commercial revenue grew by 54%, while their US government revenue grew by 40%, showing they don't need to sacrifice government customers to grow foundry or vice versa. Net dollar retention is up, operating margins are up, and the rule of 40 is at an all-time high. If you want the rule of 40, I will make a special video on the rule of 40. This was one of Palantir's best earnings call ever, but the stock price spiked by 30%, leaving one question: is it too late to buy Palantir stocks, or are the best days still ahead? If we run a discounted cash flow model like on Simply Wall Street, we see that Palantir stock is trading at a fair value. So it's not overvalued, but it's not a bargain either. DCF models make many assumptions, so let me offer different long-term perspective. Technology advances in cycles, each building on the last. In the 70s, there were about 1 million mainframe computers, but they were so big and expensive that only large institutions, government agencies, and enterprises had them. By the early 2000s, there were billion desktops in homes and offices worldwide. And by the end of 2010, everyone had a computer in their pocket. If you include tablets, laptops, desktops, and data center machines, there are more computers on Earth today than people. But that didn't happen overnight. The mobile internet evolved in 3 phases, and Morgan Stanley Research expects the AI era to follow the same trend, which is where Palantir comes in. While companies that build high-margin software and service platform perform best in the long run, they're last part of the value chain to rise because they need an established infrastructure to run on, like data centers and smartphones. Before that infrastructure can be built, semiconductors companies need to make the chips to power it. So the rise of the mobile internet took 8 to 15 years, depending on when we consider the start and end. Now imagine this same for the AI era. Instead of the mobile era, ChatGPT was released 2 years ago, so we're still near the start. That's why many of my top stocks to get rich without getting lucky are chip makers like Nvidia, AMD, as well as cloud infrastructures companies like Microsoft, Amazon, and Google. They represent the first 2 phases of our AI era. The special thing about Palantir is that they're basically the only publicly traded pure play AI software company. Imagine going back in time and investing in Google and Amazon at the start of the mobile revolution. That's what it means to be invested in Palantir today at the start of the AI era. But before anyone rushes to buy Palantir stock at all-time highs, let me point a few things. First, just because software tends to have the highest margin and biggest returns over time doesn't mean we should go all in on that group only. Semiconductors also perform well over the entire period, which is one of the reasons I cover Nvidia more than any. Second, notice how volatile all these 3 groups are. Semiconductors, infrastructures, and software all have sharp peaks and big drawdowns, and the return from software stock took a long time to catch up to the other 2 groups. If this case study on the mobile era tells us anything about the current AI era, it's that we should expect Palantir to have many ups and downs on its way to dominating the entire AI software landscape. And now, ladies and gentlemen, let's hit Palantir's chart. We have Palantir on the weekly, we have Palantir on the daily. Palantir is at all-time highs at 58.39. Past week, we had 39.29% upside. Now, on the weekly, 50 area needs to hold the support. And if this bull mania continues on Palantir and overall in the market, we could see 68 and even 81 by the end of 2024 on the weekly chart. and the daily, as long as we're above the 55 area, long continuation, and we can get 63 and 69 to the upside. Once again, thank you very much for watching this video. I do hope you find it helpful, educational. If so, just hit the like, subscribe, check the links in the description below for more educational resources. Until the next video, stay safe.